Welcome to these analyses. Today we are going to take a look at the very intense discussion about a possible bubble in the intelligentsia artificial market. A bubble that is being fueled, right, by gigantic investments and extremely high expectations. And the central question that the material we analyze raises is, are we living through an unsustainable financial bubble in intelligentsia artificial that, who knows, might burst at any moment? Or is all this enthusiasm, this excitement, justified by the truly transformative potential of the technology?
For my part, I will argue that the signs of a speculative bubble are indeed very clear and frankly worrying. This is mainly based on some financial practices that, at the very least, raise suspicion. And I will defend that, although there is hype. Obviously, the situation is more complex. The fundamental value of intelligentsia artificial technology can indeed justify at least part of the current scenario. Do you know what differentiates this moment from bubbles we have seen in the past?
Look, my view is that we are in a bubble, yes. And for me, the strongest proof of this is what they are calling round tripping, or as I prefer to call it, financial merry-go-round. We see giants like Nvidia, OpenAI, Oracle investing in each other. And here's the key point, buying services from each other. It works more or less like this. Nvidia invests in OpenAI, which takes that cash to pay Oracle for data centers.
And Oracle, in turn, buys Nvidia's chips to set up those same data centers. It's a cycle, you see? That inflates revenue and valuation based on what appears to be creative accounting, without necessarily generating new concrete value. And add to this the striking lack, I believe, of profits coming specifically from intelligentsia artificial in the balance sheets of the big techs, the so-called Seven Magnificent. Despite the immense spending and the super optimistic discourse, this silence about the real profit is strange, to say the least, isn't it?
And the systemic risk is real. These 7 companies concentrate about 35% of the value of the United States stock market. They are all tied together by these cross investments in intelligentsia artificial. If one of them falls, the cascading effect can be quite devastating for the economy and even for pension funds like the 401k in the United States.
I look at it from another angle. Look, of course, there is hype. Nobody denies that. But intelligentsia artificial technology itself has real disruptive potential, you know? Unlike other bubbles in the past that were based on much emptier promises, right? Like we saw during the dot-com bubble, for example. Regarding this merry-go-round, the question for me is this necessarily a fraud designed to deceive the market? Or is it perhaps partly a natural reflection of how these technology ecosystems work nowadays, with a lot of interdependence, strategic investments in a sector that is still, let's say, crawling? Maybe it's a bit of both, I don't know.
The valuations, yes, extremely high, seem like an exaggeration, but they can be seen as a long-term bet on the future of intelligentsia artificial, and not just pure and simple speculation. It is normal that technologies that really change the game take time to generate profit, right? Because they require extremely heavy investments in infrastructure first. And there is another point, even if the market corrects, even if this financial bubble bursts, intelligentsia artificial as a technology will not disappear. It will continue to evolve, just as the internet survived and in fact was strengthened after the dot-com crash.
Okay, I understand this long-term betting perspective, but this merry-go-round dynamic seems unsustainable to me. Money circulates, valuations explode, but where is the concrete intelligentsia artificial profit in the big tech reports? The dependence between the 7 Magnificent is enormous. You mentioned interdependence, but almost half of Nvidia's revenue, for example, comes from intelligentsia artificial. That sounds more like fragility to me than synergy, you know? If one of them decides to cut expenses, what happens? It's the domino effect.
How do you justify valuations that demand profits 20, 30 times greater than the current ones? Profits that, again, are not even clearly itemized. And the silence of the companies about these specific intelligentsia artificial profits, think about it. If they were so good, they would be advertising, announcing it to the 4 winds, right? The fact that they are not suggests that the numbers may not add up yet.
The constant pressure on Nvidia to sell more and more GPUs every quarter seems only to feed this wheel that seems artificial to me. Yes, but on the other hand, does this absence of detailed profit now invalidate future potential? Think about the gigantic investments in infrastructure that you yourself mentioned, Nvidia chips, Oracle data centers.
All of this is necessary to build the foundation of this intelligentsia artificial technology. It can be seen as a long-term investment and not pure speculation. And the interdependence that worries you can also be read as a strategic synergy that is crucial in an ecosystem as complex as this. The history of technology shows us this with the Gartner hype cycle, that known pattern, right, where new technologies go through a peak of exaggerated expectations before finding a more productive and realistic place.
And as for the silence about profits, there might be strategic reasons, don't you think? Strong competition, monetization may still be in its initial phase, but don't you think every disruptive technology starts more or less like this, with investments that seem speculative and low profit at the beginning? How do we differentiate that from a real bubble? And look, we need to separate the market valuation a little from the real technological impact.
Take Sora from OpenAI, which creates video from text. Leaving the financial issue aside for the moment, it is already raising real debates about the future of creative work, for example. This shows a concrete technological advancement, even if the money is not yet coming in the same proportion. You see?
For me, the key point remains that the current financial indicators, especially this merry-go-round and the lack of clear and proven profits coming specifically from intelligentsia artificial, point very strongly to a speculative bubble with very serious risks. A correction seems probable to me, perhaps even inevitable, even if no one can definitively say when.
And for me, the central point is that despite valid concerns about the hype and some financial practices that deserve attention, intelligentsia artificial technology is real. Its long-term value is still being defined. A correction in the financial market may happen, yes, and will probably readjust expectations, but that would not be the end of intelligentsia artificial. It would just be a new stage in its evolution, a readjustment of financial expectations in relation to technological reality.
Undoubtedly, analyzing the various perspectives that the material offers on this complex issue is fundamental.
Exactly. The data and arguments we discuss here invite us to think deeper about this interaction between technological innovation, financial markets, and of course, the impacts on society as a whole.